Hello and welcome to Mortgage Saver. I am very excited to be here today. We have some great information for you. I am a licensed loan officer. I've been in the business for 15 years. My job and objective here in the community is to try and help all of the viewers try to save money with anything related to their home. I have several guests on. Every week it's somebody different. I'll have an appraiser or an inspector, somebody about title insurance and deeds and warranties. Today I have a very special guest, a good friend of mine, Tom Daigle, and he is here with National Home Lending. He is an expert in his field. He understands what the borrower needs, what you need, and tries to obtain your objective with your loan, whether it be a cash out refi, a purchase on an investment, purchasing a new home, a first-time home buyer, and we have lots of great information today for you. I want you to know that I'm not here to try to sell you on how great our rates are or that I'm the best loan officer. Tom's the best loan officer in the world. We're here to try and educate you so that you understand, if you decide to go through a mortgage process, what it is that you need to know, what you have to bring to the table, and just pretty much all the terminologies of certain things regarding a mortgage. So I'm really excited. Tom, thanks for coming.
Hey, glad. Thank you for having me.
The first thing we want to talk about is just some of the very basic terminology. Maybe just let's let the viewers know the difference between a ARM, a balloon, and a 30-year fixed rate or a 15-year fixed rate.
Lisa, there's so many programs available today to the home buyer. And if you go back in history, you know, there were also a lot of different programs. So today there's several options that could help different homeowners. They all have a different situation. So depending on the certain borrower's situation is what program we'll get for them, we'll set up for them. We'll take a look at the big picture and we'll help educate them and show them the best program for themselves.
Right, and ARMs, we don't really do a lot of them anymore. You know, adjustable rate mortgages, we really stick with the fixed. You know, maybe a smaller term fixed, a 5, 7, 10, 15 year rather than a 30. But when rates are this low, I think it's really important for people to recognize that and stick with a fixed mortgage program.
Yeah, and like you said, rates are low. Adjustable rates are a little lower than the fixed rates, but again, you know, they change. They're only locked in for a certain period of time, and then you're subject to a rate increase.
Right.
So with the 30-year, 15-year, 10-year fixed rates being as low as they are, it's nice to get locked in at that low rate, not having to worry about it.
Right, right. You don't want to have to worry about a balloon or something adjusting.
Correct.
When you're getting a mortgage, you'll hear these two terms a lot, DTI and LTV. Explain that a little bit.
Well, debt to income ratio, that determines what your ratio to debt income is. So we'll take the total amount of debt going out per month, and you'll divide it into the income, and you can figure out your debt to income ratio. They're making some changes right now. You're looking at about a 43% is where they want it maximum DTI, including the new house payment. So that's something you could do simple math. If you could figure out the house payment, add up your monthly bills.
Right, include taxes and insurance.
Correct.
And if you're not putting a lot of money down, you're going to have something called PMI, which we'll talk about a little bit.
Yeah.
So you take that, divide it into your income, and that should be your debt to income ratio.
That'll give you your debt to income ratio.
And that really gives us, the loan officers, an opportunity to make sure that people do not overbuy.
Correct. So yeah, we don't want you, the banks want to be able to ensure you can make the payment.
Right.
We don't want to be overextended there. We did that once. It didn't work out so good. So yeah, that debt to income is pretty huge. Now, there are similar cases we can go higher than that depending on DU approval and so forth, but yeah. We try to keep them around 40.
Right. Oh, what do you mean? I want a house for $200,000.
Hey, with no income.
Right, right. So yes, and mortgage professionals, they know how to calculate this stuff. And you may think that you can afford a payment, and you may, you know, believe in your heart that you can afford $1,000. But when the numbers all crunch down, you may only be able to afford $600 or $700. So trust your mortgage professional. They do know what they're doing.
Today, we do.
Yeah.
Today we do.
Let's talk about, a lot of people are like, am I getting an inspection? Am I having an appraisal? Talk about the differences in that.
A home inspection is a little different than an appraisal, a lot different. When you buy a house, you want to have a home inspector. If you got a father who's a builder or an uncle or somebody's a plumber, electrician, yeah. But a home inspector looks at everything, Lisa. It's very important for people to know that they can go in there, they have a trained eye, they're going to go in and look at things that a plumber, electrician, a builder won't look at. And they a lot of times will find something that's major league wrong with that home. And you'll waste, it's not a waste of money. You probably get a home inspection for under $300-400 today.
And I tell people this, this is the biggest investment, right? We're here to try to help you protect your biggest asset, which is your home. And I tell people, would you go buy a car without driving it once?
Yeah, you're going to drive it.
So get that
home
inspection.
for
Yeah,
sure.
get the inspection. Have them crawl through the attic and have them make sure that every plug is working and that there's no water damage or past water damage that you may not see because we're not trained for that.
Yeah, they can look under ceiling. They go through the house. It's unbelievable what they do. And
Yeah.
everyone I suggest gets a home inspection. If you're going to buy a house, absolutely get a home inspection.
Yeah.
Now, when you talk a little bit about the appraisers coming out, that's a little different. They're not going to do all the tiny little crevices and so forth. They're more looking at the value of the home, if there's any major structural damage that they can see. But an appraisal is going to give you the value of the home.
Right. And we'll talk just a minute about this because we have so much to cover today. The appraiser, people are like, my brother's an appraiser. I want to have him do it. Well, we have to tell them that's illegal. We're not allowed to do that. Or if somebody calls and says, call the appraiser, I don't like the value. We're not allowed to speak to the appraisers either.
Yeah, that rule's changed a whole bunch. We go through a third-party AMC. All mortgage companies now, we don't call the appraisers or talk to them direct.
Right.
We go through a third party.
Right. And that's tough for us, you guys, because when we're trying to get your value on a refinance or when you're buying a house and you love it and you want it and it comes in at $5,000 less than what you've purchased it for, we understand that it's frustrating for you. And we want to help you, but comparables are what really dictate the value from the appraiser. And we're loan officers. We take care of the finance part of it. They are the professionals that look for comparables. You'll hear us say comps. Well, those are comparables in your area, usually within a 5-mile area. Is up here, we're kind of in the country a little bit here, so we sometimes can stretch those guidelines a little bit if there's not comparable or similar homes in your area. I know we don't really have neighborhoods per se. We have acreage and beautiful land. So your appraiser takes care of the value and the inspection works for you. The inspector works for you as the buyer going through the home. Just think of it like a car, right? You're going to inspect the car. You're going to take it to the mechanic first. So those are some basic terminology, words that we use a lot in the industry. And if anybody has any questions, they can contact me. Our number is 248-627-7283. I will also have Tom's information available. And sometimes we may speak too fast, or you may wonder what we just said. Sometimes we might wonder that too. We do have all of this information in writing. You can request a copy of it. It doesn't cost you anything. Just give us a call or go to our website, mtgsaver, S-A-V-E-R, @gmail.com. Okay, let's talk a little bit about the process before we have to take a break. The very first time that I call you, that's kind of role play, I call you and say I'm really interested in getting a mortgage.
Well, Lisa, that's great. I would send you to my website. I have an online website at the bank that the clients could go in and fill out an application.
Give that to them. Go ahead.
It's www, my cell phone number, just use it for business only, 248-767-2751.com. I use that so my clients can get a hold of me on the weekend or the agent so they don't forget my cell number, 248-767-2751.com. At that point, I'll have you go in and fill out the application.
And what's on the application?
Basic information, Lisa, we're looking for birth date, social security, address, income, job history, a lot of little things, how long you've been on your job, how much you're making. This way I can go and I can pull credit, look at your debt to income ratio, tell you if there's anything funny on there, because a lot of times it really just comes down to those two things, income and credit, because if I can get past those two, I'm going to send an approval out pretty quick.
Great, great. And people sometimes wonder about pre-approvals and what kind of items should be on that. So when we come back, we're going to talk to Tom some more about pre-approval and the process and about the time frame of when you start the mortgage process to when you close. So we'll be right back.
take part in the 5 for 5 food drive, ONTV's 4th annual food drive benefiting the Oxford Orion Fish Food Pantry on Saturday, February 8th from 10 a.m. until 4 p.m. Stop by the ONTV studio at 1349 Joslin Road on February 8th for some live entertainment. Donate at least 5 pantry items or $5 to have a chance to win some fabulous door prizes and help stock the shelves at the Oxford Orion Fish Food Pantry. Can't make it to the studio on February 8th? Watch all the festivities live from home on Comcast Channel 10 and AT&T Uverse Channel 99, or stream it live on our website at orionontv.org. Want to donate before the event? Stop by these participating local businesses to drop off your non-perishable pantry items. The ONTV food drives have collected in excess of 13,000 pounds of food in the past 3 years. This year, ONTV is hoping to collect 8,000 pounds for the Oxford Orion Fish Food Pantry. With your help, it can be done.
We want a Habitat home.
I love working on my Habitat home.
Soy dueño de una casa de Habitat.
My neighbor is a Habitat homeowner.
Being a Habitat homeowner has changed our lives.
My mortgage payment for Habitat is less than what I pay for rent.
Habitat for Humanity of Oakland County currently has homes available with mortgage payments lower than most rent payments. If you or someone you know needs decent and affordable housing, call 248-338-1843 or visit our website at habitatoakland.org.
Welcome back to Mortgage Saver. I am here with Tom Daigle with National Home Lending, and we're talking about how to get yourself approved for a mortgage, whether it be a refinance or a purchase. And we'll kind of go over the process and the time frames for these things. Again, I appreciate you coming and spending your time and trying to
help somebody.
Yeah, educate. It's hard.
So many questions out there today, Lise. Yeah.
They are, and I know that you conduct your business like I do, and you do something like a borrower interview where you try to explain everything to them.
Yeah.
It's not just
several
over
times.
the phone or.
Yeah, today several times.
Yeah.
It's a relationship.
It is
really
a relationship. Okay, so we talked about when somebody calls, you send them to your website.
Yeah, have them fill out the app.
Have them fill out the application. You then pull credit, and you look at different items on the credit. So go over that just a little bit.
Certain things, we're going to look for late payments, foreclosures, bankruptcies, judgments, late payments, any type of fraudulent activity. There are several little issues we look at. So when we look at a credit report, it takes a little bit of time. We're just not going to issue a pre-approval looking at a credit score.
Right.
There's a lot of other factors today with all the short sales and things that have gone on in the last 5 years in our industry.
Right, right. So you look at the credit, and then do you talk to them about what kind of needs they have, how much money they want to put down, because that differentiates the program.
Sure we do. We talk about different things like that. When they fill out the application, I'll request items from them, which gives me, I'll ask for pay stubs, W-2s, bank statements.
Right.
I'll look at certain, send me over your driver's license, make sure you are who you say you are.
Right.
And then with that information, we talk and we'll figure out a good program for the client, and I'm looking at bank statements, how much money they've got to use to put down, because that's a big factor today too.
Sure, sure.
We talk about things like gifts. Seller concessions is another great thing to educate the buyers
Right,
on.
right. Well, let's go back just a little bit, because those are great terms. Explain what seller concession is.
Seller concessions will help buyers, and it's money that can be given by the seller of the home. They're going to give them concessions. So basically, let's use a $100,000 loan, for example. On a $100,000 purchase price, the buyer, based on his situation and his finances, I can suggest with the agents we work with, hey, our buyer needs a little concessions to help them close on the home. Pay for some of their closing costs. So they can ask for seller concessions of, let's say, $3,000. If the seller agrees to it, they put it in the purchase agreement. Now the buyer has some additional funds to pay for some of the closing costs and the prepaids.
Right, right. Yeah, and I find that so many of the people that are looking FHA, per se, or rural development, they just don't have a lot of extra money.
That is nice, because you could, RD, 100% financing like our VA loans, no money down on both of those loans. But the seller concessions, you could get them with both, and it really helps you. You can legitimately get into a home for very little money today.
Yeah, yes. It's not like the good old days where you put 20% down all the time.
No.
Those are good conventional loans,
that's
but
correct.
yeah, that's not most of, 90% of the people.
Today. We love the options for the buyers.
Right. So once they've given you all their documentation, And this process takes time, and it really matters on how quickly you can get the items that we request from you.
Yeah.
Because it could be a 50-day program, it could be a 20-day program, depending on from start to finish how soon you get the items. If we give you a list of documents that we need you to bring, W-2s, tax returns, bank statements, proof of insurance, just assets. The sooner you can get those to us, the sooner we can figure out what it is that you qualify for and what program best suits you.
And there's lots of options at that point.
Right. So that you enter this into the system, you get the pre-approval through underwriting. Let's talk about gifts just real quick. Seller concessions is when the seller gives you some concession or money towards the purchase of your home. And a gift would be?
From a family member, immediate family member could give you a gift. It could include your down payment. So typically, if you're getting seller concessions and a gift from a family member, you can get into a house for really no money out of your pocket.
Right, right. And a gift letter does state there is no repayment of this.
That's correct.
It doesn't go against your debt to income ratio because they're signing something saying that you do not have to give that money back.
Now, on a conventional loan, unlike a government loan, you have to have 5% of your own funds. So it's a little different, and we'll talk about that again when you call me after we get you pre-approved. That's the process of educating the buyer.
Right.
There's so many little things we can talk about to steer them in the right direction and educate them on the process.
Right, absolutely. And you're a great person because you really take the time to
Yeah, I do. I love talking to people, kind of like you. You make it easy, Lise.
Okay, so you met with them, you've done your little borrower interview, you've talked to them, you've given them now a pre-approval based on what they're qualified for.
Correct.
Now they can go look for a home.
That's right.
So now you call your realtor after you see town, not a minute before, right?
Correct. That's right. Get your pre-approval first and then go talk to your realtor. And if you don't have an agent, we can refer you to one of our buyer's agents that work for you for free. You don't pay a buyer's agent.
Right. That's true. Very true.
So it's nice to have somebody that works with us and can help you find your home.
That's right. That's right. So you talk to your agent, you have your pre-approval, you're out looking for houses. We'll call you every week. Did you find anything? What's going on? And then they'll call back and say, can I have an extra $20,000? I really found this house that I love. Well, we'll go max DTI, but that's about all we can do. So once you're out looking for a home, you find your home. And then you have to give the agents some money. We'll talk about EMDs a little bit.
Yeah, earnest money deposits kind of, it's a way of you showing good faith. You're going to give a deposit, generally depends on the size of the mortgage you're buying or the home. So you want to write the check to let the people know, hey, take your house off the market. I've been pre-approved. Here's my letter. I'm moving forward with the loan, plan on closing it within the next 30, 40 days. And it's an opportunity for the seller to know we have a good buyer.
Right.
It allows him to take his house off the market.
Right. It's good faith. That's really what it is. It's a show from you, and they're different. They could be $500. They could be $5,000, depending on what the seller has in the listing.
Yeah, exactly right.
All right. So they've gotten their EMD, and then they go through and they are waiting for the seller to accept their offer.
Correct.
And that usually takes
couple days, generally not too long.
Unless the bank unless the seller is doing a short sale. And let's just touch on that.
If it's a bank involved and it's a short sale, yeah, it could take a lot longer. Sometimes those short sales could take months before a bank would go back and actually approve your offer.
And explain a little bit what a short sale is.
Short sale would be somebody had a home and they were underwater maybe. The market has changed and the values have dropped and they've borrowed more than what they owe and they can't really afford to stick around anymore. Either they're lost their jobs or some financial difficulty in their lives. So what happens is they go to sell the house, they list it with a real estate agent, and at that time they'll find out what the true market value is. And again, if you owe $200,000 on your house and it's only worth $100,000, it's a short sale. You're selling it for less than what you owe on it.
So the bank is taking the difference and writing it off. And really for the buyer, and this is about buyers today, we could talk about sellers and refinances and stuff like that at a different day. You don't have to worry about the difference. What you're getting it for is approved from the bank, and it is the seller's responsibility to deal with the bank and what happens between the difference of the sale price and what they owe.
Yeah, exactly right.
Okay. So now that you've got your approved offer, let's say it's not a short sale because we only have a little bit of time, and Let's. What's the next process after that? So the deal's approved. Everyone's happy with the price. What's next?
Well, then the loan would get, I'd take the purchase agreement and all the documentation. At that point, we have a loan. So at that point, I would draw docs. Docs meaning we would input your loan into the system. Today, you're not just signing 5 pieces of paper like back in 20 years ago. That's all we did. Today, you're signing 30, 40 pages. I'll send over the documentation. We'll go through it, come into the office. We'll sit down and work with you, and then we're going to submit that loan to underwriting.
Perfect. All right, so we're getting through the process, and when you're doing it, it's much more fun than just listening to it. We'll be back in just a few minutes to go over, now that the offer is accepted, now we'll get you to closing. So we'll be right back. Thank you.
Can't make it to the 5 or 5 food drive? Drop off early at Hollywood Markets, accepting canned goods and non-perishables.
Welcome back to Mortgage Saver. I'm here with Tom Daigle. We're talking about the pre-approval process. And so far, you've brought in all your docs, we've pulled credit, we've got the application ready, you've put the offer in, you've given your earnest money deposit, and now they've accepted your offer. So Tom has now submitted your file to underwriting.
And generally that takes 2-3 days today to get a file back. And when it comes out of underwriting, an underwriter generally is going to ask for conditions. So they're going to ask for certain things. It could be a number of things they could ask for today.
Right. 33 of them.
That could be a lot. Generally, though, the more complete file I take, the better it comes out.
Right, I'm laughing because, yeah, it can go anywhere from one condition to, yeah.
But we're used to it, so we don't get frustrated. We'll get through the conditions together.
Right, right.
It's where the relationship between the client and ourselves build.
For sure, absolutely. So now you, as the buyer, have to order your inspection.
Home inspection time.
Yep, get your inspection. We are going to order your appraisal.
That's correct. Yep.
If there's no water on, electricity on, the agents need to get that on so that the appraiser can go with running hot water and with the power on and with the heat.
So important, yeah.
Yeah.
So we don't get re-inspection fees.
Well, that, and make sure that everything is working,
sure.
right,
Working
right.
order.
So the appraisal's done. We submit it back to underwriting in the meantime with our conditions that we've requested from the borrower back to the underwriter. You can get approval, or like you guys have a speed pass, so which means it's a nice clean deal. There's nothing else that needs to go through underwriting, right?
Yeah, correct.
Now we're going to talk about locking a loan. So the borrower sees on MSNBC that, was that the right station?
That works.
They're all different. Some golf station.
Yeah.
That they seen rates were 3%, and I want that rate.
Yeah, that gets difficult sometimes with the clients because you can hear so many people quoting different things, and they're not telling you the whole story. There's costs for lower interest rates generally.
Right, discount points.
That's right. They never tell you the bottom line. They just try to. It makes sense. I'm going to tell you I can give you 2%, versus somebody says I can give you 5. I'm going to go talk to the guy who's giving me 2 too.
Right.
But that's not the case because once you get there and waste all your time, well, it's 2 if you pay this amount of money.
Right.
So locking loans is very easy for me to do. It's building that relationship and trust with the client.
Right, and don't believe what you hear all the time because it is true. We can advertise our lowest rate, so it might be a 1-year are,
Yeah,
you know, and then that's, you know, 2.5%, but the real rates, you know, are in the 4s, you know, for a fixed 30-year, you know, FHA or conventional, you know, there's so many variations with the rate. We have adjustments for loan amounts and DTI and credit scores. So really rate is very inducive to your situation.
Yeah.
So don't just hear a rate and believe it.
That's good.
But
Good advice.
yeah. Okay, so we lock the loan, we submit the conditions back, and we always try to keep the homeowner updated. Regular phone calls, emails, just so that they know that we're all over their file. And people need to understand that a lot of times as a loan officer, we don't even have the file in our possession, or it's not our turn. It's almost like volleyball or tennis. I do something and I hit the ball back, and then the underwriter has to go through it, or the appraiser needs to make condition changes, or you know, the inspection came back and there's, you know, tiles missing in the basement. Whatever it is, it's their turn. Then it comes back to us, and then it go, you know, so it's really, you know, we get the phone call, well, what are you doing? Well, it's not in my court right now. It's over here, or I'm waiting on you, ma'am, for your documents, you know.
Takes time.
Yeah, so.
And it's back and forth. Cleaner files, easier, the better I do up front, easier it is on the back end of a loan for sure, but you're going to go back and forth.
Absolutely, absolutely. So everything comes back, appraisal's good, underwriter came back with no more conditions, your title is clear. Let's talk about title for a second. It's so important.
It is important to have title, and then you make sure there's no liens on the property, that when you go ahead and buy a home, you want to make sure that you're the only lien holder. There's not other panic liens, somebody else put a lien on the house. We make sure of that, and that's what the title work represents.
Right, right. So we hire a title company to do that for you.
That's correct.
Okay, what else do we have? Okay, so now everything's in, it's clear. Now we're going to set the closing. So we get the clear to close, and I always do a dance when I get a clear to close. So I'm not going to show you now.
Yeah,
but
everybody gets excited.
It is.
It's
so exciting, and so I get so happy, and that's the part of the job that I really did love. Was when I got my clear, because I knew that I was either saving somebody money, getting them into a new home, you know, something beneficial for the client was happening. Sure. And I think that's where you get your passion.
Absolutely. I've been doing it for 20-some years now.
Yeah, it is amazing.
It's nice to put people in homes.
Now let's talk about the cash to close, right? We get, what happens is the lender sends the title company the closing documents. The documents then are reviewed and worked up from the title company. It comes back to us in a HUD settlement statement. And then you call the borrower.
Correct. We call the borrower, go over the fees, we'll review it, make sure everything's right. We do find mistakes very rarely, but every once in a while. It's in the borrower's favor, but most of the time. But we'll give you the bottom line number that you need to get a cashier's check or money order for the closing.
And that's really important. You cannot go to the closing with a check. You need to get a certified funds check, cashier's check, money
and we
order.
cover that too.
Yeah.
A lot of times the title companies are having it made out to them now.
Yeah.
And not to the borrower, so it's a good day.
Perfect. And then that's about it. They get their keys at the closing. I usually try to tell people to sign up for the GEMCAP processing, or GEMCAP, which is the biweekly payments, because that it changes your net effective interest rate from, let's say, 4% down to 3%, and a 30-year down to 20%, just by making sure that the principal goes more towards your mortgage, which is a great opportunity for you, and we'll get into that in a different show. Thanks so much, Tom, for coming.
Glad you had me.
Yeah,
Thank you.
I think you're amazing, and I think what you do for people is,
I love you too.
truly, it's truly awesome. We have lots of great guests coming up this season. We have an appraiser coming in. We have an inspector coming in. I have a title company. We have some insurance companies coming in to talk about what the right type of insurance for your home when you're buying homeowners insurance. We're going to talk about life insurance and where the best place to protect yourself, because your home is your biggest asset, and we want to make sure that you understand all the facets that go around it. And thanks for watching. It's my pleasure, and God bless.
Thanks.